I'm fascinated by the way the management think, because you make or break companies with good decisions or bad decisions. So what are the challenges? You're talking about building this thing into a mid-tier. You're going to need to raise money. You're going to need to make those acquisitions and go public, I suspect. How do you manage all of that? What is it about you guys versus the bunch of other people that I've spoken to who've got experience in this, this basin? Why are they going to go for you? Nickel's a particularly hot topic at the moment for investors, so we take the opportunity to speak to Jason Jessup. He's the CEO of Magna Mining. They're a private nickel company operating in the Sudbury Basin in Canada. We talked to him about their strategy, how they're going to raise funds, and what their plans are for the future. If you want to look at any of those topics, click on the timestamps below. That'll take you to that part of the video. If I could ask that you click the button in the corner of the screen to subscribe to our YouTube channel, that'd be helpful. And if you want to see more videos like this, click the notification bell. Okay, let's see what Jason had to say. Hello, Jason, how are you?
Great, Matthew. How are you doing today?
Not too bad, not too bad. Thanks for joining us. Now, this is an early stage project, but it's a nickel project. I think people are excited about nickel at the moment. So why don't you give us a 1-minute summary and we'll get into it.
So Magna Mining is a private company. We incorporated in Ontario in 2016. And really the purpose of our company was to consolidate nickel copper projects in the Sudbury Basin. So we're very focused on one particular region. This is a region that we have a lot of experience in. I personally live in Sudbury. I've worked here for different companies over the past 20 years. So this is really where we're comfortable. In 2017, we made our first acquisition of Ursa Major Minerals. Ursa Major owns the Shakespeare Mine. Shakespeare is a nickel, copper, cobalt, platinum, palladium, gold open pit project that has 21 million tons of Ni 4311 resource. It is, it's rather advanced in that it was in commercial production in 2010-11 through toll milling. Approximately 490,000 tons of ore was toll milled through a mill here in Sudbury. It does have permits, all the major permits to build a 4,500 ton per day open pit mine with a concentrator and tailing storage facilities. So this really attracted us to the project. And, we were I would say, very strategic. And when we purchased it, because nickel was in that $4 range, people were not really looking at nickel projects. But we understand the fundamentals behind nickel. And when people are not talking about nickel is a time to make acquisitions. So we've been able to advance the project over the last couple of years, de-risk it further. And we're pretty excited to move it into, updated feasibility study and in a position to make a construction decision in 2020.
Perfect. Okay, thanks for that summary. Appreciate it. I'm interested in this story because it's early stage. You're private. You talked about that, but with all things Canadian, it eventually gets listed. So I would love it if you could share with us the process that you're going to go through to kind of get it to that point. So for our subscribers and followers and investors, I'd love to maybe start with who's in the team. So you said you were introduced to it. So there's you. Tell us about you and then tell us about the team.
Sure. So as I mentioned, I'm from Sudbury. I've worked for a number of different companies here. I really started my career in Sudbury working for Inco, which is now Vale. So I was management at one of the mines here in Sudbury. Spent about 5 years working there, great company, great experience. But after 5 years, I recognized that I probably don't fit within a large bureaucratic company like that. So I went to work for another up and coming junior that was in the basin. That was FNX Mining. Those who don't know FNX Mining, in 2002, they were a junior company, had a share price about 25 cents, acquired 5 past producing mines from Inco. Through good exploration and creativity and entrepreneurial spirit, they were able to bring 3 of those mines back into production, made some significant discoveries at them, and before the financial crisis of 2008, had a share price of approximately $40. So huge success, and I was really fortunate to be part of that team and see that growth.
What did you do there?
So I was operations manager at 2 of the mines here in Sudbury. brought one of them into commercial production, helped raise another one from a 300,000 ton per day or 300,000 ton per year production to over 800,000 tons a year. Mm-hmm. So, I was heavily involved in the operation side of the business. And after 2011, we had merged with another company, done a little bit bigger, and I thought there were some opportunities maybe to work for another junior. So I've spent a couple years in the corporate development field, doing work in the royalty space as well as junior mining, structuring deals and finding acquisitions and evaluating projects. And in 2016, saw an opportunity here in Sudbury to do something, again, similar to the experience I had at FNX. And that's when we formed Magna.
Okay. And who else is on the team?
So our chairman is Vern Baker. Vern Baker is a professional engineer. He has a MBA from Stanford. Vern was the VP of operations at FNX Mining. We worked there together. Vern was a great leader and actually a really great mentor of mine. And we kept in touch after we both left, and we both see this opportunity in Sudbury to take some of these non-core assets and be very successful mining them differently than some of the majors.
But he says here he's full-time CEO at Jaguar Mining. Is that?
Yeah, so he's our chairman. He's also a CEO of Jaguar Mining in Brazil. So he joined that team in August, and he's helping them unlock the value in their operations in Brazil.
So what's his actual day-to-day with you on this particular project?
So, we communicate weekly. He's, he's involved as much as needed. So he is available. You don't get to see him probably in person as often as I'd like to, but he's a great leader and great collaborator to bring teams together.
Right. And what does that mean for you in terms of what you're trying to do now? So he's giving you advice or still mentoring you, or?
Yeah, well, he's the chairman of the board. So, on board decisions and large decisions, he obviously gets involved. He's still very involved in the strategy of how we move forward. And we have a few other opportunities that we're looking at. So he gets involved in that. One of the things that we've done here, and I think this is really what speaks to the experience, and I can get into some of the rest of the team, but, our experience working in FNX and in Sudbury is really based around people. And I think that's what differentiates us from maybe other groups that have, tried to do something similar in Sudbury in the past. We were a very successful group because of the culture. So, Vern, I would say, from a cultural perspective, he sets that tone for the group, and we provide a lot of ownership to the people that work in our team. So we're a small team, we wear many hats, but right down to, the guys that go out to site and do water monitoring and, the care and maintenance work, we give a lot of ownership to our people. And that's the successful culture that we saw at FNX Mining. So we recreate that.
Okay.
Now, as far as the rest of the team, our CFO and co-founder of Magna is Derek Wayrush. Derek is a CA by background. He's been an executive or a board member of a number of publicly listed companies over his career. Currently, he is the interim CEO of Palladium One, which is a junior palladium company. Explorer, and has a property in Finland as well as a nickel property here in Ontario. Derek, we at this point we do not need a full-time CFO, so he acts as our CFO and as a board member. Derek and I speak almost daily and quite involved, especially on the financial side of the business. And Peter Lightfoot is our VP Exploration. Peter is a veteran of the Sudbury Basin, spent a lot of his career with Inco and Vale as a chief geologist for international nickel targeting. And he literally wrote the textbook on Sudbury deposits and the origin of the Sudbury igneous contact. Okay. So Peter's, he really leads our exploration in and around Shakespeare, as well as evaluations of other non-core assets that we're looking at.
Okay, and I notice you've got a bunch of other strategic advisors, and let's not get into that. We can maybe post this presentation up at some point for people to look at. But I'm interested in, you kind of like, I'm bringing the band back together here. Some people you've worked with before, people who've experienced success together, and you think, I mean, but what do you think actually? You say, we just want to do a project, or we just want to work together? I mean, what was the genesis of this? What was the idea?
Yeah, so we have big aspirations here in Sudbury. We don't want to be just a little single asset junior who, hopefully we can get to a point where, we're a 50 or $100 million company. We have seen the success that can happen, and like I had mentioned in the past with our group. So we really have big aspirations. There's a few things that we see. So by having Shakespeare and building the mill, it gives a real strategic presence in the basin. There's a number of deposits that either don't fit well with the majors, or have metallurgy that maybe isn't conducive to the large mills they have here in Sudbury. For example, Vale's mill can process probably 35,000 tons a day. So it's a huge plant. You can't customize for a small percentage of ore coming in. So having this opens up a lot of opportunities to negotiate and find other feeds that can be higher grade than our open pit ore.
Yeah, but come back a bit for me here. You're getting into the project. Come
Sure.
back a bit. Tell me, like, helicopter view. What's the right? We are trying to be what, a major nickel producer in the Sudbury region or globally, or what's the idea?
So absolutely, we are looking to become, I would say, a mid-tier producer in the Sudbury region. We're very Sudbury focused. We're leveraging the experience of our team, and and I would say our advisory team is very important to us. Again, a lot of former FNX people who have a lot of firsthand knowledge and insight. So that is what we are focused on. I would say that we are not experts in mining exploration and mine building. We've not built a mine in the Congo. We have not operated a heap leach gold operation in Chile. What we have done very successfully and what we are experts on is exploration, mining in Sudbury, and building mines in Sudbury. That is really where our expertise is. So this is where our focus will be.
Right. So what's the challenge going forward then? Okay, you know what you want to be. You've articulated that clearly, and it makes sense. Okay, that's the experience. You know what you know. What are the challenges? You're talking about building this thing into a mid-tier. You're going to need to raise money. You're going to need to make find acquisitions. You're going to need to make those acquisitions, and all the while, and go public. I suspect at some point. Mm-hmm. How do you manage all of that? Is it realistic, first of all?
We believe it's realistic. We believe that we have a great strategy. We have a team that's done it before. Raising money, I think, is always a challenge in the junior space. And being a private company, especially, in the past couple of years as nickel prices were quite depressed, yeah, it was absolutely challenging. Again, we were able to keep our G&A costs quite low, be really focused, continue to de-risk. Going forward, we believe in this better nickel environment, there's a lot more opportunity to raise capital. Having a project and a company that's focused in a great jurisdiction, there's a tremendous amount of metal endowment in this region. And, with the combination of not just nickel, but also, some really considerable byproducts of copper and cobalt, platinum, palladium, gold. We have seen a lot of interest in we think that getting the capital, once we have our feasibility study done for project financing, it is quite reasonable. We're not looking at raising $500 million to build out Shakespeare. Our CapEx it's not completely finalized, but it will be in about the $150 million Canadian range. So it's manageable. We have a good byproduct credit, so there's opportunity to use a precious metal stream as a portion of that project financing without taking away from the overall economics too much of the project. So there is some strategies we're working on right now as far as moving that forward. As for other projects in the basin, because of our success in the past with many of our team members, finding the capital to make these acquisitions, we believe is very possible. It's very doable. And the challenge always is dealing with majors. So as being a smaller private company, we get asked the same kind of questions a lot of people do. Where are you going to get the capital? Do you have the support? Are we wasting our time negotiating with you? Now, we've been here for a while now. Like I said, I've been working in Sud for 20 years. We've built long-standing relationships. We know a lot of the people and the players. And now that Shakespeare has moved forward over the last year, we have, developed more credibility, I would say, with some of the other companies that are in the basin, where they see a strategic benefit in working with us. So, I would, obviously a deal's never done till it's done, but I would say in the next year, we should be able to secure some additional projects in the basin that would have synergies with our Shakespeare mine.
So, see that again, this is where it starts getting interesting for me. Okay, you've got a long track record in the basin. That's great. You know people, right? But like you say, they're only going to go with you if you've got access to capital, right? Or there's a strategic benefit. And you're saying some people are interested, they're interested in your knowledge, presumably. But it still comes back to the issue of availability of cash, right? Availability of good projects, because no one gives the good projects away for free, right? So you got to either step up and pay a premium or pay a price for it, or you got to deliver them something which they don't have. And what is it about you guys versus the bunch of other people that I've spoken to who've got experience in this, this basin? Why are they going to go for you? Is it personal relationships?
Yeah, I think there's a little bit. So one of the things that we're not looking to buy a world-class deposit in the Sudbury Basin. Okay. Those aren't for sale.
Well, tell us about that. What is it? Do you find small assets, roll them up, and together,
absolutely.
The sum of the parts? Is that the idea?
That's what we're looking at doing right now. So we're looking at projects that are, ideally past producers that can be brought back into production relatively quickly, but just do not make sense for the cost structure and the way that larger companies operate. And, we have an in-depth understanding of that. Again, going back to our experience, taking mines that were, very, very low priority and would never restart it under a major company, we were able to take those, approach things differently, keep cost structure low, use mining methods that probably haven't been used in the Sudbury Basin in 30 years to very selectively mine some of these deposits and create a lot of cash flow. Now, it isn't on the scale that really moves the needle for a major company, but for a junior company, it can create a tremendous amount of cash flow. And so these are the opportunities we're looking at and we have experience in doing before. I wouldn't say it's easy. It comes down to having the right team, the right culture, the right approach, and having a CEO that asks the right questions from their people so they can stay focused on what's important. So I think we have a lot of credibility with people. They know what we've done here before. And that gives more confidence that if they do a deal with us, at the end of the day, there's going to be some benefit to them. Because most of the deals that we'd be looking at doing in one way or another have some tie to the owners long term, whether it's an offtake or royalty or something. So, they don't want to sell something that at the end of the day, really, there's no long-term benefit. What's the point? So we've developed some confidence, I would say, in some of the discussions and the people we know in the basin.
Okay. So first things first, though, you got to get Shakespeare moving. You got to get it financed, and you got to be able to, I think you talked about doing various studies and sort of understanding what it is that you've got and trying to understand the economics. That's fair enough. And if you do that, you might be able to persuade someone to give you the money to be able to develop this thing out. So from what I read, it's the standard sort of low grade, about 0.3, that sort of level, 0.33. But you do have the copper credits, which is a good thing. So low grade means you need scale to get the economies going there. Do you need to do these other acquisitions to kind of give you that scale, or do you think Shakespeare has got the potential to actually become a meaningful project in its own right?
Yeah, good question. So, Shakespeare is I would say you describe it in the lower grade category, but it's not overly low grade at the, because of the byproducts. So right now it's sort of sitting in that, 0.65% nickel equivalent range. And that's why it really requires about a 4,500 ton per day plant, running it at 2,000 tons per day, you just don't really get the payback you require. So I think we have a good size plant. That's what our permits are currently, is for 4,500 tons per day. One of the things that has held back Shakespeare in the past is it only has, in the 2006 feasibility study, about 11.5 million tons of reserves, which at 4,500 tons a day gives it about a 7-year mine life. And so people look at that and say 7-year mine life is way too short. It doesn't kind of meet our hurdles, but there's tremendous exploration potential. So to get back a little bit to why there's a 7-year mine life, in 2002, Ursa Major optioned the property from Falconbridge. They made a discovery in 2003 about 150 meters to the east of the west deposit, which was the known historic deposit. It was about 2.5 million tons. And, had a great intersection, followed that up, and basically drilled out over the next 2.5 years about 14 million tons of resource. Now, this was at a time in 2005 where nickel was starting to take off, and they saw an opportunity here. Let's get this permit, let's do a feasibility study and get it into production and take advantage of these rising nickel prices. So they continued in 2006, completed a feasibility study. 2007 received permits for construction. So they did a great job. But after 2005, there really wasn't a focus on exploration anymore. They had enough to get going. Once we're cash flowing, we'll continue to drill out, extend the mine life. And that was the strategy. 2008 came along, everything stopped. And it wasn't until 2010 that they were able to actually, start up through toll milling some production. But when we acquired the property, it was really an orphaned asset. The owner had become very non-core. There was no institutional knowledge left. So it took us a lot of work to pull together all the data, the historic work that was done, reinterpret it, take the historic geophysics, reinterpret that. What we found was there's a tremendous amount of exploration potential, and we're quite excited about it. In 2018, we did some drilling in an area where we had put down some borehole EM, identified a plate between the east and west deposits. So currently the project has 2 separate pits as per the 2006 feasibility study. But what we were able to do, we drilled this EM plate between the 2 deposits in an area that was previously believed to be unmineralized breccia, and every hole hit exactly where we expected in resource grade mineralization. Now, we had a budget that didn't allow us to continue to keep drilling, so we're hoping to continue that drilling and bring more of that material in between the 2 pits into resource. By doing that, we should be able to deepen the west pit and expand the resources considerably. There's also a zone that, has very little understanding. 2 holes intersected it in the 50s, one of the early drill campaigns. It has a 103-meter intersection just to the south in what would be the footwall of the west deposit, and there's no follow-up drilling. So it's a very large, resource grade type intersection zone. Currently, it's about 750,000 tons in resource, but there's no drilling around it. Up dip, it's open. Coincidentally, we found some mineralization on surface. I guess long and short is we really think through exploration, there's a lot of potential at Shakespeare. It's really been underexplored, and we think there is tremendous scale. Right now, taking the resource to 21 million tons, we believe, we can add another 5 million tons of resource with additional drilling around the west deposit.
Right. Okay. Those are the kind of exploration statements I would hope you would say and expect you to say. But if we come back to what you've got today, okay, I do want to talk about this mill component, because I want to understand your thinking. I'm fascinated by the way the management think, because you make or break companies with good decisions or bad decisions. So around this mill,
Sure.
Right now, today, 4,500, you say you've got a permit for that?
So we have the permits, we have the closure plan and major permits for the mill and tailing storage facility in mind.
Beautiful. So how long does a mill of that size take to build?
So once, you start breaking ground, assuming that, there isn't delays to long lead item components, it's about an 18-month build, but let's say 18 to 24 months.
And what does that mean for you in terms of your ability to kind of hit this cycle? I mean, you've got to have a view on how long this cycle is going to run. how quickly you can get into production, and does this mill, the cost of this mill, prohibit you in a down cycle from actually operating, right? What are all the economic factors you're trying to manage, and the risks you're trying to mitigate? Because you've got to have a view of the future. You've got to have a view of what you can do today and what happens if there's a down cycle, right? And you must have then had contingencies in place. So, well, maybe we just go and renegotiate terms with the I think there's a couple of other mills locally, aren't there? Get better terms with those guys. So how did you go about measuring those things up against each other, if you did do that?
Yeah, it's a good question. We get asked that a lot. Once the mill is built and we're in production, the mine actually has a pretty low C1 cost. And again, we're not finalized the feasibility study, but from all the internal work we've done, we're going to be somewhere, on a byproduct basis, south of $1 a pound nickel. So very good C1 cost. As far as the toll milling idea, we definitely have looked at that. And a lot of people have said, why don't you just continue to keep toll milling, create some cash flow? It is an option. Now, I don't see it as being the best option for us. Again, when you talk about these larger mills in the basin, they're really set up to process a massive amount of certain ores. And because our ore it's got great recoveries, but it's not the same as a standard Sudbury contact and 2% nickel ore. So I don't think we're going to get as good of terms as necessarily as we would want. And is it worth investing? I think that if nickel went to $10, there'd be an opportunity during our construction stage to be shipping ore, as we're stripping, start some early production through some toll milling for maybe a year or two until the mill's up and running. That is definitely a possibility, and I think we could make some pretty good cash flow from that. Long term, I just don't see it as being the best option for the company, because really at some point, you do not have final control over your destiny. If they say, we've decided we don't want your ore anymore, what do you do? So there may be some opportunity to create some cash flow in the short term, depending on, metal prices. But I think that, the real focus is to get this built, be a low cost producer. As far as how we can tie in other projects, Shakespeare on its own has a reasonably good payback. If we can extend the mine life, the NPV goes up significantly. But if we could add in another deposit, let's say another, non-core Sudbury deposit that has some higher grades, higher margins, and add that in at 1,000 tons a day, displace some of our open pit ore. Well, the economics of that, they are fantastic.
Well, yeah, I mean, but I don't envy a junior mining board at all, because there's so many ifs and buts. If it gets to $10, and if we can find an asset, and if we can do, it's kind of like me playing with a spreadsheet of, what ifs. I could make a lot more money if my shares went up in price every day. I'm trying to sort of piece together the kind of the roadmap that you go through. So what I'm hearing is you've got to get Shakespeare nailed down, get that where you want it to be in terms of what you know about it, to be able to go and have intelligent conversations, sensible conversations with either money or people with money. And you're not public yet, so you've got some options, right? Strategic partners who may be just money and offer you different types of money, or an operating company which has cash, which again wants you kind of to be, somehow under their wing. I mean, you've got to look at a multitude of different options, and you must have these sorts of conversations each week, I suspect, to work out how you move forward, right?
Yeah, and it's actually interesting. We have a lot of irons in the fire, especially in the base metal space. There's just a limited number of players, so you want to get to know all of them. So we've had a lot of discussions with a lot of the different players. At this point, we may want to partner with a producer already, look for a strategic investment. We have been talking with a lot of private equity groups who are quite interested. They like the team, they like the space, they like the opportunity and the de-risk nature of the project based on the permits. So there is a lot of opportunity out there. There's three majors operating in the basin. We have regular discussions with all of them.
Yeah.
And, we're quite optimistic about the opportunities we have here. So we do need to be, flexible, see opportunities, weigh them against, other opportunities and risks. And we're doing that on a regular basis. And it's part of the exciting and fun part of the business for me.
Well, it's exciting till you run out of cash, right? And then it stops becoming exciting. And I appreciate you're private, and we don't have to be worried too much because you're not public yet, but you will be. Mm-hmm. So how have you financed this thing so far? I mean, you've been in it 2 years.
Yeah, so we started off with a very small sort of friends family type round, raised some money, and we brought in some a strategic sort of investor from Vancouver, David Elliott from Haywood. So David came in, and he's been a very supportive shareholder. David Elliott and his group own about 20% of the company, and they've been great. We are looking for that sort of next strategic, partner to put in another piece of money. Right now, we need about $2 million to finish the feasibility study update and do some of this high priority exploration drilling adjacent to the deposit, as well as, finalize some of the minor permits and engineering we need to get done. So, that money is, it's, there's interest out there. Being a private company, it gives you some opportunity to get money from maybe some places where, from private equity groups that are looking to take a bigger stake in a company. But, being private also has its drawbacks where, some investors just can't invest because they don't have that opportunity for liquidity. So, it's, we talked to lots of people, and we keep our G&A costs extremely low. So, we really want to make sure that, we're doing what's right for our shareholders, keeping the money that we're raising going into advancing Shakespeare, advancing our strategies. And so we've been able to do a lot, I'd say, for a little. And it's one of the reasons we've been hesitant up until now to go public, because just the extra costs associated with that. But, definitely, I would say once we have our feasibility study done and it looks positive, with coupled with hopefully some exploration success, it would be a time we'd definitely look at.
So, how much is the management sitting on at the moment? They have shares in this, I guess. You bought shares?
Yeah. So management has a lot. So the two founders, myself and Derek, we have about 47% of the company currently. Neither of us have taken any salary or compensation. I don't even have options in the company. I am really working hard for the other shareholders that are putting their cash into the company, and I believe so strongly in it that I'm willing to do that. It's about the big picture.
That was my next question. Were you paying yourself? You're not. That's good. So the money that's been put in today is going to bought in costs from outside costs at the moment, right?
Correct.
Okay. And then the next $2 million, would that continue to be the case?
Yeah, at some point I wouldn't mind paying myself a modest salary if the board agrees.
What?
But
what does modest look like? I'm intrigued. But some company you were saying, what's modest?
Yeah. So, probably more than 5,000 a month and less than 15. So,
Okay. Okay, so we've just seen some fantastic salaries on here, and I do ask the CEOs, what they're earning, because for the public company it's easy. I can take a look, but they don't like talking about it. Okay, so look, I think there's been a great introduction to you, which is the important thing here for people. So when you do go public, they can sort of see what you're like and what your thinking has been like, and what your plans are, or were from the start of this. And track back and see if you've delivered on those. So I do appreciate that. Do you want to kind of give us the 3 reasons why people should be continuing to follow your story?
Sure. So I'd say first and foremost is really, like I had mentioned earlier, I think that our team is unique. I think that we have a group that's been successful before. We're not trying to do something that we're not experts in, that we don't have experience in. We're really trying to leverage the knowledge and the experience of the team in a region that, you know, we have deep roots in. So I think that's sort of the biggest thing. Nextly, Shakespeare is a unique nickel development project. I don't know of any other nickel development projects that are out there in a good jurisdiction that could be producing concentrates in, you know, 2.5, maybe 3 years, and have a capex of, you know, 150 million. So it's really unique, de-risk, great. You know, we have a great region we're working in here. You know, being in Sudbury, we have every service provider. You know, workers go home every night, so you don't have the camps, which allows us to keep, you know, operating costs lower than a lot of projects. So I think that's great. And then the third thing is really our broader strategy, the consolidation strategy to grow in the Sudbury Basin. I think that is something that all of our investors currently have really seen as sort of a key reason that they want to get in early and take advantage of it, because the potential is great. If you believe in nickel, I think that we are one of the best stories out there.
Well, yeah, it's definitely the story of the moment. And I think, you know, cobalt and lithium have been through that in recent years, recent past couple of years, and you know, gold hopes that it is the news story. But people are interested in nickel. Be interested to see how you guys get on. Why don't you stay in touch? Maybe we should touch base in the next 3-4 months when you sort of know
absolutely
what's going on. All right. Appreciate your time today, Jason. Thanks for telling the story.
Well, thanks a lot, Matthew.
Thanks very much for watching. We hope you enjoyed that. And if you did, please click the button in the corner of the screen to subscribe to our YouTube channel. You can also catch us on our website, cruxinvestor.com, and Cruxcast, our podcast series. Plus, most days you can catch us on LinkedIn and Twitter. We'd love getting your feedback, so please keep that coming, and we'll speak to you again soon.